Hello, I'm Paul Jones, the Fund Manager of the Boston Income Fund. The Boston Income Fund is reporting a return of 2.7532% for the June 2016 quarter, equivalent to an annualised return of 11.043%. Over the duration of the June 2016 quarter, the members of the Reserve Bank of Australia Board reduced the official cash rate by 25 basis points, and the cash rate is now at the new record low level of 1.75%. This has impacted on the return to investors for the June quarter. However, the return remains in excess of 11%. In the minutes following its recent board meetings, the RBA noted a fall in investment from the mining sector, which is still having an impact on the level of growth of real GDP. However, it was also noted that this rate of growth was stronger than anticipated. Amongst the important events that took place over the June 2016 quarter was the outcome of the referendum held in the United Kingdom, which decided that the UK should exit the European Union. Uncertainty about the possible outcome in the period leading up to the referendum had resulted in an increase in forward-looking measures of volatility in key exchange rates globally, and the final outcome also had a feedback effect on a few Australian companies. Domestically, we saw the recent federal election dominating headlines, and the delays in declaring the outcome of the election result in early July created significant and legitimate concern that global ratings agencies Moody's and Standard & Poor's may move to reduce Australia's credit rating down from its current AAA level. Such a downgrade would reverberate across the economy by increasing the cost of credit and place pressure on a country's ability to service debt. The RBA will have a keen eye on the possibility of this occurring, with the expectation being that they will strongly consider further reductions in the official cash rate. As the fund manager of the Boston Income Fund, I will closely monitor the cash rate for the possibility of future movements, as this will have a direct impact on the return to our investors. At 2016 financial year end, Thinktank Group Proprietary Limited has exhibited an outstanding performance. Thinktank has achieved results over and above the key targets set for the year. One key area of achievement that is particularly encouraging is in the originations of new loans in the loan book. Thinktank wrote $181.4 million in new loans over the 12 months. Origination activity was also strong across the June quarter, with the total value of new loans written during the quarter coming in at $43.6 million, which was made up of 56 new loans with an average loan size of approximately $780,000. At year end, the total value of loans under management was $422.1 million across 669 loans. In comparative terms, the value of the loan book has grown since the June 2015 quarter by $105.2 million, an annual growth of 33.2%. The pipeline of potential loans remains reasonably strong in the June 2016 quarter, and this is encouraging as we move into the 2017 financial year. These very positive metrics, combined with the fact that arrears have persisted at historically low levels, are definitely ahead of our expectations and industry standards. The current level of year-on-year growth provides the management of the Boston Income Fund with a great deal of comfort in its relationship with Thinktank going forward. Finally, we wish to thank all of our investors in the Boston Income Fund, many of who have remained since our very beginning, for their continued support and encouragement during the recently completed financial year. As always, if you have any questions about this statement, or if you wish to discuss the investment in the Boston Income Fund, please feel free to contact me on 02 8920 8886.